Hello, welcome along to the Property Academy podcast by Obus Partners. I'm your host, Stephen Knight.
And I'm Andrew Nicol.
And today on the show, we're joined by Tony Alexander, an independent economist, former chief economist at the BNZ, and we're talking about what will be the next pandemic. Now, the really interesting thing about economic cycles, Tony, is they tend to be kick-started, or rather kicked down, by different economic events, whether it's Lehman Brothers collapsing over in the States, or whether it happens to be a COVID pandemic, or any number of other things. And I want to find out what the next thing is going to be. But just before we hit record, you were telling us that you were one of the first people in New Zealand to start writing about COVID back in January 2020.
Yeah, maybe not so much start writing about it as an, oh, here's a thing I'm going to monitor each week. It was my first publication, my weekly Tony's View publication, and I think it was January 9 or 11 of 2020, where I wrote, there's a couple of things to keep an eye on for this year. Number one, the Americans, or whoever it was, have just killed a general in Iran, and so there might be some flare-up in the Middle East. Number two, there's a lot of people getting sick over in a certain location I'd never heard of before in China, and so we'll keep an eye on that one. And of course, that's eventually got a name, COVID-19, and we learned about locked borders and lockdowns, etc.
And I remember at the time you were saying that for a little while you'd thought, I think the world's due for a pandemic, because the last one had been about 100 years ago. And I remember you discussing that. Why did you think we were overdue for some large event like that?
Yeah, not so much overdue, more something I'd been preparing for from about 2001, shortly after the 9/11 terrorist attacks, when people were saying, oh, maybe the next move is they're going to release smallpox. Now, for the 2 or 3 years before that, I'd been building up a wee store of food in expectation of, well, the 1855 earthquake for Wellington, it seems well overdue, and so we're going to be on our own here in the countryside north of the city, so we better be able to feed ourselves and not relying on going along to a food bank nearby if you can even get out. And then when the smallpox discussion came along, I thought, oh, wacko, 6 months, we're going to lock ourselves down for on the property if this comes along, and so I started building up a greater store of food, lots of rice and pasta. Only 2 weeks ago did I get around to finally chucking some of it out because I was so disappointed when we went into lockdown at the end of March of 2020 when I realised, what, we can still go to the supermarket? And I'd been thinking, great, I'm going to be using all this rice and pasta and all these bars of chocolate and tins of spaghetti and etc., which now is in the dump in Porirua.
Well, why weren't you using it during the pandemic? That was your chance.
Because you'd take the trip to the supermarket as something special to treat yourself.
Yeah.
And then when the lockdowns were over, the thing to treat yourself and make yourself special was go out and buy as much as humanly possible in terms of spas, gazebos, home renovations, landscaping, electric bikes, kayaks and everything. We went absolutely ballistic.
How do you get this kind of thing past your wife? What does she think of all those kind of ideas?
Well, we had 5 children. She just kept running the economics argument, but the marginal cost of an extra child is so low. It didn't quite work out that way. I don't know if she'd have listened anyway, but of course it made sense that, well, if we're going to be there looking after ourselves, you need lots of food for 7 people in the household.
And just before we figure out what the next COVID is or the next big world event, how much rice and pasta did you end up throwing out?
Okay, I must have thrown out the other day 3 bags of rice, and they'd be the big ones you can hardly pick up, like the big full bags of spuds. I don't know how many kilograms. It must be 30 kilograms or something or other. The pasta I haven't been able to throw out because I've got a theory that's going to last forever. Honey will last a couple of thousand years at least, we know, based on the Egyptian example there. And the tins of spaghetti and baked beans, yeah, I've looked at them, and those that I bought as replacements from 215 onward, I've kept those. But the other ones that were looking a little bit rusty there, they're gone.
It's going to be so funny. In 2,000 years, someone's going to uncover Tony's
treasure
bunker, being like, this person, those New Zealanders, they really loved their honey and hoarded it back in those days. So we've had a lot of world events, especially over the last 20, 30 years. Actually, ever since the world began. What do you think the next big thing to kind of disrupt the world is going to be? Is it going to be another pandemic? Is it going to be trouble out of the Middle East? What's coming next?
Well, you can't forecast what a single big thing is going to be. Us economists, we basically don't do that. I always remember we'd talk about a gentleman called Ravi Batra, and people said he accurately predicted the share market crash of 1987. Yeah, he did, but he was just the one who made that prediction closest to the share market crash. There'd be plenty of others just before then, and if it had been a few weeks later, it would have been some other sod with their name and sort of attributed to it. So you can't forecast when these things are going to come along. All you can do is, when it hits, try and take a reasoned view on, okay, what is the impact going to be? How are people going to react? And adapt your behaviour, as we did during the pandemic. When it first struck, none of us had experience of what normally happens, so we all appropriately panicked and ran around like headless chooks. And then we learnt that one thing that happens when there's a pandemic, lockdowns, etc., interest rates get slashed, money gets printed, people buy houses. And that meant that when the second lockdown came along and the third lockdown came along, we didn't panic and try and list our houses and sell them as quickly as possible and dump our shares. We went out looking to buy more, because then we knew what would happen. So, look, in the next maybe 10 to 20 years, if we get another event like that, I do not expect to see the same sort of, let's say, using the rabbit's ears parentheses here, opportunities arise in terms of depressed share prices and temporarily depressed house prices. My focus as an economist is more on the underlying trends which could be negative out there. And that's when people like me would have a look at the global trade environment in particular, where we see a general movement away from multilateral trade agreements, like the Uruguay round from, 2 or 3 decades ago, things that improve access for New Zealand's agricultural products into other markets. This is one of our vulnerabilities. It's your pests and diseases, it's the seismic events, and it's the trade barriers. And when you look at the potential election of Mr. Trump again in the United States, promises of 10% tariffs on everything going in there, that will directly hit about 13% of New Zealand's export receipts of what we send across to US. But my greater concern is the signalling impact to other countries. Oh, well, the Americans are doing that, we're going to do this for other countries as well. So that's sort of my bigger underlying, let's go 5, 10, 15-year concern. The multilateral trade environment is moving against New Zealand. And there's a particular maybe manifestation of this or a tie-in, and that's with China. In that if you go back 3 years, 33% of our export receipts were from China. We're now down to 27.5% and falling. The outlook for China's economy is not particularly good, and so New Zealand is going to have to find another market. Well, that's when many people, by now, you'll have already had jump up in your brains out there, name of a country. Oh, India. We're going to sell to India. Not so fast. India is nowhere near as advanced in China as in being able to have good sustained growth. Their manufacturing sector is only 10% the size of China's. They don't have the infrastructure there, etc. I don't think it has the capacity to replace China as a destination for New Zealand's primary exports in the future. So that's partly where my mind sort of looks in that direction.
And how much impact does China having a poor economy or a worsening economy, how much effect does it actually have on us?
Well, if you look at the forestry sector, it's a heck of a lot because the property sector is heavily depressed in China. It used to account for 25, 30% of their economic activity versus maybe 7% in an economy like New Zealand. And without the construction going on, there's not the demand for the wood products coming out of New Zealand, so depressed wood prices is one manifestation we see here. And of course, that in combination with high electricity prices maybe makes a contribution to some of the closures we've seen in that wood processing sector recently. The tourist market, we have only seen 50, 60% the number of Chinese visitors return to New Zealand that was coming in from 2019 pre-pandemic. And so that is vitally important for New Zealand as well. And because the bulk of our food items sent to China eventually end up sort of in the food services sector, restaurants, families in China are rebuilding the wealth that they've lost from their property investments over there because it went so bad. And that means they're spending less. And so that feeds through to the prices we can achieve for our edible products sent there.
And with reduced tourism, it's interesting that Queenstown still seems to be rocketing along. What's causing that, do you think?
Well, being not massively dependent on the Chinese flows. Well known around the world as Queenstown, obviously, especially with the Aussies and the Americans as well. The desire to ski before the snow runs away maybe is what is in the minds of some people with global warming. But not being wholly dependent on that Chinese market.
Let's take a really broad view of the world. One thing that's quite interesting is we're seeing the Chinese working age population decline as well as their absolute population. You've just talked about that their economy's not going so well. India's population continues to increase and we're starting to see it develop more and more. My real question when I look at birthing rates is when is it going to be Africa's turn to really, really develop? If I think about the Nigerian numbers, did you know the average woman in Nigeria has over 6 babies? Andrew. It is huge compared to about 1.6 over here in New Zealand. And so my question is, do you see, or at what point do you see Africa really starting to develop as well?
Yeah, that's got nothing really to do with New Zealand's economic prospects, because if this was purely just a numbers game with another, what are we up to, 7 or 8 billion people on the planet, we'd be away laughing and massively rich because there's no shortage of people out there who need to eat, and we make good stuff for people to eat. It's the challenge is really for New Zealand to move up the value-added chain, and unfortunately we're sort of maybe on the verge of throwing that down the gurgler with Fonterra moving away from the consumer brands business. With the economic reforms from 4 decades ago in New Zealand, we had this idea that we're going to move up the value-added chain and not be a commodity producer. Well, we are just a commodity producer and possibly going to become more so in the near future. In terms of Africa, yeah, people have talked about that for quite a few decades, sort of half a century or so, and still waiting. And just because you get strong population growth in some parts doesn't mean that that's a market that New Zealand can necessarily extract good value from, because it's just not reasonably going to be the case. If I were to focus somewhere, it would be more your Southeast Asia, and I'd suggest Indonesia in particular. A good, growing, developing economy, improving economic and security ties with Australia in particular, and that becomes quite important for us to sort of piggyback on that to some extent. That's where I'll be looking.
And then I suppose the other thing is, how much should we look through world events? If I think about some of the bank collapses we've talked about, the fact that we're in recession now, we were in recession during COVID, then we weren't. The COVID pandemic was massive. We had the GFC. We've had things before that, the dot-com crash. But if we look at all of those world events, property prices, share prices, asset prices in general have continued to climb. Some of that is because of declining interest rates, and there's a flaw with how far interest rates can structurally fall. But if we think about those world events, if we're taking a long-term view, can you just look through most of them?
Well, yeah, in hindsight, of course, you can. There's a graph that gets dragged out every now and then of the Dow Jones index starting in 1926. And, of course, there was the crash, soon after that. But, of course, it rises strongly across the A4 page where you're looking at it. But that includes the share market crash of 1987 in there and all the other sort of declines along the way. They get lost in the wash. So as an investor, you might look at that and do the same for residential property prices, farmland, commercial property, and you'll go, oh, it's obvious these prices rise over the long term. But you don't live in the long term. Life is a series of short terms. And in the short term, when the next big event comes along, we will again run around like headless chooks and go, what is this going to mean? Where are things going to go? And all of a sudden, the most important thing for a person isn't that steady accrual of wealth over the long term. It's of avoiding losses in the short term because I don't want to feel like I feel at the moment. I will feel better to crystallize and know my loss rather than wonder if it's going to become another 50% or something like that. And that is why so many unfortunately inexperienced young people sold their shares at the onset of the pandemic and moved from growth funds to conservative and locked in a 30% loss on their portfolio. And this is where people like myself have a bit of a responsibility when these next things come along in the future to remind people about these graphs, etc., over the longer term. There will be adjustments, there will be uncertainty, but don't panic. Other people will panic, and maybe this is when you can pick up some bargains out there, which is definitely what the fund managers will do, because the people running them, they've been around for decades and they've seen it all many times before.
Other than buying a whole lot of rice and pasta, have you been guilty of making any kind of poor investment decisions in the panic, whether it be recently or a long time ago?
I have made decisions from which I have learnt, and I've rationalised, that's not too expensive price to pay for what I learnt. And my big learning only cost me $200, and it came back in about 1980 when Mosgiel Mills down out of Dunedin there was sort of in the process of collapsing away, and their share price would go 4 cents, 2 cents, 8 cents, 5 cents, and it had this beautiful sort of sawtooth pattern. And I thought, this is a no-brainer. Here I am, first year at university, no girlfriend. I've already got a 10-speed bike. What more do I need in life? And the government's paying me to go to university. My fees were only $258. And so I thought, oh no, let's take some money and let's buy some of these shares when they're low, and I'll sell them when they're high. So I bought a whole lot when they were 4 cents, and I sold them 2 weeks later when they were 2 cents. And I lost $200. And what I learned was that my risk aversion, loss aversion, is particularly high. It only cost me $200 to find out I'll never be a dealer in a dealing room. I spent 5 years in them as an economic advisor, but I couldn't deal my way out of a paper bag. My strategy needs to be something different from that. The shares eventually got paid out by the accountants after the full liquidation about 20, 25 years after that at about 64 cents for your guide.
And so, given that you understood that about your own risk appetite, have you applied that to your investment strategy over the last 20 or 30 years?
Well, yes, I have. My investment has been in myself, in my career as an economist, on focusing, identifying what I'm good at in my job and what I'm bad at, avoiding the things I consider myself bad at and focusing on the things I consider myself good at. And it just so turns out that the things I'm good at, people enjoy the public speaking and the writing. And as I found from setting up my own business almost exactly 5 years ago, they're willing to pay for it as well. So that's been my investment. And when somebody says to me, what should they invest in? I sort of can't understand that, because my focus has never actually been as an investor. I know people are going to struggle to understand this, but I've made my wealth through my career over time and simply accruing money and by purchasing properties, but I never bought one as an investment. They've always been for family-related reasons, and they've gone up in price. It's like, okay, this is sort of easy, isn't it? And the trick is, of course, don't get burnt off in those short-term periods, be it a psychological uncertain period because there's a new pandemic or something, or because it's a short-term cash flow pressure. Recognize those are the two things that are going to burn off the inexperienced and the undercapitalized. And so that's why you go in with good management of your debt and full awareness of when things have gone bad in the past. So seek out people who have been around for a while and ask them about previous downturns in the economy and the markets to be prepared for when it next hits the fan, knowing it definitely will at some stage.
Now, I suppose the last question I've got before we wrap this episode up is, how much should I pay attention to world events? Because there is an absolute barrage of world news constantly coming at us. And being over here in New Zealand, we sometimes don't know what to pay attention to. I'll give you an example. We had quite a few listeners of the show message in about the Evergrande crisis. Big Chinese developer, what happens when they fall over? Well, the Chinese property market has really shat itself, if I can say that, and yet it hasn't really impacted us in any way that most people on the street would point their finger at and say, I feel really bad about my property values, or I feel really bad about my economic situation because of the Chinese property crisis. Obviously, it impacts a lot of people who are over there, but not over here. But a couple of months ago, or 6 months or 12 months ago, a lot of people were worried about messaging us about that. So how do we know which world events to pay attention to and which ones are actually going to impact us over here in New Zealand?
We'll always be impacted in some way. We're a small exporting country, and we're just going to get lost in the wash and kicked about if the world goes through turmoil, etc. So we need good relations, diplomatic, economic, with large economies and some small ones, obviously, as well. We tend to take a moralistic view of anything to do with debt. Deep down inside of most people out there is a view, debt is sort of wrong, isn't it? It's not a good thing. And if there's a thing happening over here and there's debt involved, and obviously Evergrande property sector, this is a comeuppance. Now, some of the people will come at this from a religious point of view. Other people, not quite so successful, it'll just be, comeuppance. You borrowed all this money, and now look what you're going to do to the world economy, etc. These things inevitably do not play out to the extent people think. Because the lessons from central banks have discovered over the years is when you get things where people are really starting to go down the rabbit hole on this, you intervene. You cut your interest rates, you print money to make sure you don't get into a run of banks, like in the Great Depression, half US banks closed down, that you don't get that happening again. And we saw a version of this early last year when there were 3 regional banks in the United States were closed down, and they were handled phenomenally quickly. It did not metastasize into a wider threat to the US banking sector. And so that's what we economists look at. How quickly will the central bank, etc., regulatory authorities react when something new comes along? And that was sort of the lesson of the GFC and the Lehman's, that they needed to act maybe more aggressively because for 6 weeks there, we were on the road to a new Great Depression in the latter part of 2008. So world events matter, but people should be very wary, especially of American websites and American social media. For some reason, they are exceedingly apocalyptic. And if we revert back to my preparing for smallpox as a scenario of 20, 25 or whatever years ago, and I went on the internet wondering, okay, what do I have in my stores there? After about half an hour, I found myself into militia websites. I thought, what's going on here? It was before the prepper programs on TV, and coming across these lists of most valuable things to have. And at the top of one of these lists was a particular size bullet that went in more guns than any other size bullet. And that's what you needed to have. And I thought, okay, there's a bit of a loss of reality over there. So be careful and just be aware. People make money by dragging you into their dystopian potential realities. Be careful.
So if you are prepping your bunker for the next pandemic, honey, it lasts for thousands of years. Yep. Pasta, because Tony doesn't think it's going to go off. And maybe...
Some bullets.
Oh, yeah, but only the certain ones that go in
whatever that size is, and I don't know it.
Right, let's wrap it up there. But please don't forget to rate, review, and subscribe to the podcast. Really does help us get the message out to more people. And hey, if you are listening to this on Apple or Spotify, you want to see Tony's face, just Google Opus Partners YouTube. It'll be the first thing that comes up. If you're watching on YouTube, make sure you hit that subscribe button. We are quickly on our way to growing this channel to 20,000 subscribers. Thanks for listening to the Property Academy podcast. I'm your host, Steve Knight.
And I'm Andrew Nicol.
We're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.